Dennis, do you think that the market's interpreted everything correctly today? I mean, we haven't had huge moves, but we did get a quite clear flattening of the curve, and the 10 years away from that 3.1.
That thing is pretty darn flat these days, isn't it? But, you know, I think it's pretty fair interpretation. And when I look at the language, the 290 words, very terse, let's keep that in mind, 290 words issued by the Fed today, you know, I think it's kind of a signal day that they've taken accommodative out of that language. Now, we've sort of been preparing for it for a long time, but nonetheless, think about where we were 10 years ago, 5 years ago, 3 years ago, and that language is out of the statement. That is a meaningful moment here in our economy and 10 years past the crisis. So I don't think we should let that go unreflected upon.
Yeah, I mean, the other thing to reflect upon, and one of the reporters, I don't remember who, asked Chairman Powell about this. He said, is this too good to be true? We've got super low unemployment, the lowest it's been in decades, and not runaway inflation. And we're in this sweet spot. I mean, you're at Lazard now. Is that how you see it, and how long can that last?
It seems like a sweet spot. We had a long discussion about this yesterday, and we sort of went through the same thing. And you know what? Despite there being all sorts of potential problems out there, it does feel like a sweet spot, which makes me naturally think, aha, well, what could go wrong from there? But to Mike's earlier point, unemployment is where it's at. CPI is where it all seems about right.
Consumer confidence is skyrocketing, 18-year high. Go ahead, Steve.
Yeah, no, Dennis, did you see the Fed's GDP forecast today? I'm wondering what the folks at Lazard think about that. It's a pretty sharp slowing. We go, if I'm not mistaken, I don't have the numbers off the top of my head, but it was 3.1, 2.5, 2, and back down to 1.8, right? That's where we go. That was the 4-year trajectory of that. Is that what you guys are seeing? First of all, it's not that bad to go back to 2.5 next year, but down the road, it looks like it gets, pretty mediocre.
Well, on the far end of that prediction curve, I think you and I both know that is a notion in the wind, Steve. But I'd say the one question that I have that I still wonder about, I'm sure Steve does too, is productivity growth in this country. It still has been slack.
I mean, behind that question that you cite, Sarah, was not just aren't things great right now, but implicit in the forecast is unemployment staying at or below 4% for 3 or 4 years. And so I think his question was, how much weight do we put behind the specifics of the forecast? And I think Chair Powell's consistent about this, saying it's really not about some careful clockwork precision instrument of forecasting 3 years down the road. We're just kind of going to wait, and going gradually is the way not to break things along the way. And that's how he interprets policy.
And that's where we get the Goldilocks talk every time we get an economic number.